Hello and welcome back to the Wall Street Petting Zoo. This week at the zoo is our weekly podcast on the news on Wall Street. My name is Robert Coburn, and Chris is out this week visiting family, so this week I will be giving a quick rundown on the short trading week. On Monday, the S&P 500 and the Nasdaq reached new highs with news that China will be raising penalties for violating intellectual property rights. Punishing intellectual property rights has been a burden on many U.S. companies as knockoffs of their products are cheaply and sometimes poorly mass-produced and sold to the U.S. With little to no tariffs in place, this has caused many companies, specifically tech companies, kept them from maximizing their profits as they spend more money protecting their properties. The Dow also regained its position over and hit over the 28,000 mark. Tuesday, retailers like Best Buy and Dick's beat earnings expectations going into the holiday shopping season. And then Trump also parroted again that both sides are close on making a deal. Wednesday, the Commerce Department announced that durable goods orders were up 0.6% after posting a 1.4% drop in September. With the market trending upwards, this is a good sign going into the holiday season. Now, although the market was closed on Thursday because of Thanksgiving, Trump actually signed two bills which would impose sanctions or suspend Hong Kong's special trading status over rights violations. I actually did not expect him to sign these bills, but apparently he did on Thursday. So Hong Kong's special trade status has the U.S. recognize their own trade and customs systems rather than using mainland China. On Friday, China threatened strong countermeasures on that news. Stocks that I was watching this week, so my picks this week didn't fare too well, with most posting poor quarterly earnings. Palo Alto Networks, their shares dropped 12% after reporting earnings outlook below analyst estimates. However, by the time we all digested our, leftover Thanksgiving lunch, the stock actually recovered most of its ground it lost. So it actually is almost back to where it was when it started the week. HP stock lowered by almost 10% after their revenue missed their fiscal fourth quarter analyst estimates, despite the EPS being ahead of their estimates. Dell also lowered its fourth quarter guidance and reported their earnings fell short of their targets. Dell has actually been dealing with a shortage of processors from their supplier Intel. I've actually seen this firsthand when ordering Dell equipment at work, where what normally ships in a few business days actually sometimes takes 10 to 15 business days, or the chip is actually no longer in stock, so I have to reorder the equipment. So it's not entirely Dell's fault, but it's not good for their stock if they can't sell their products. VMware reported earnings. It came in well above expectations. However, analysts soon discovered that the reports didn't actually include any of the numbers from their company Black acquisition, which caused the stock to trade lower. So the fact they omitted that information from the earnings report kind of made some analysts pull back their expectations, and so the stock lowered because of it. And Dollar Tree, after lowering their fourth quarter guidance, Dollar Tree stock dropped 15%, dipping below the $100 mark. I say after the stock bottoms out, this would be a good time to buy into the stock, hopefully before any type of U.S.-China trade deal is signed, because once that's signed, I would anticipate the stock to go back up. Stocks I'm going to watch this coming week. Salesforce, they're currently recovering from their annual tech conference Dreamforce, which actually happened the week before Thanksgiving. Salesforce is looking to continue its trend of beating earnings estimates, as it's done that the last 4 quarters. So maybe a fifth is in the future for them. Zoom, so despite raising its outlook for the year last quarter, the stock took a beating, losing over 15% in September alone. Some of this dip could be attributed to investors wanting to get out before the lockout period on employee stock, as the stock was above the $100 mark over the summer. It's down to about mid 70s right now. So I feel like this is a good time to buy, as the company's core infrastructure and business model is a strong one, and the stock is down near where what I would consider the bottom. So I'd say now is probably a good time to buy in. Maybe wait until the analyst report to see, or the earnings report to see how they're performing. But I feel like it's probably a good time to buy. Dollar General. So last week I was looking at Dollar Tree. This week it's Dollar General. So after Dollar Tree announced its lower fourth quarter guidance and their stock dipping, one can only think that stocks of a feather tend to trade together. Like Dollar Tree, Dollar General is expected to have rising costs due to the ongoing trade war with China. For those short sellers out there, it would be a good time to short this stock and make a quick buck, as I don't anticipate them beating expectations. And that is it for this week at the zoo. Chris will be returning next week, and we'll obviously have a full podcast. This is just a quick recap, especially with the short trading week with Thanksgiving. I hope everyone had a wonderful Thanksgiving for those stateside, and don't forget to like, share, and subscribe, and follow us on Podbean, and click on the Webull link if you want to help support the podcast. We will see you next week at the zoo.